Hello fellow option traders, this is Jeff, and this video is going to be about a little insurance policy I'm going to take out regarding 9/11. I'm not sure exact. Today's the 10th, as we can see up here, and it's 10:22 in the morning Eastern time. And I'm trying to figure out if I want to do this insurance policy or not, and what I would do. I know everybody's got their own opinion. But what I would do is buy an at-the-money put, probably with a January expiration, so I don't have to worry about time decay a whole heck of a lot. And I would buy it on an instrument that I think would respond appropriately. Probably not an underlying, maybe index, and most definitely an ETF. So what I'm thinking about is using SPY and buying a 50 delta put with a January expiration. So let's take a look here. Oh, here I have SPY. I already faked this I was doing some analysis on this particular one, which is at 200. But if we were to look at the chart on SPY right now, we would see that it is currently trading at 199.01. So I might change my mind here and change this to a 199. Okay, so let's take a look at the Greeks here for 199. I changed my font to be bigger, so I hope that you're all okay with that. So here we are, put at 199. So bigger font, less room. Let me shut this thing down over here. There we go. Okay, now we got more room. So we're looking at a 13.9 implied volatility. Delta's 51, which means that for every dollar move, this is going to move 50 cents. Gamma is 0.03 and theta is 0.03. So theta is telling me that if the stock doesn't move, I'm going to lose 3 cents a day on this particular trade, minus 3 cents. And it's pretty much the same for almost everything around here in that price range, because let's look at the trade tab instead. You can see things a little bit better. All right. Okay. So we're looking at this one right here. So if we looked at everything else around it, we have 14 open here. We could make it bigger if we wanted to, but they're not losing a lot each day because expiration is so far out. So the question is, back to the Analyze tab, what do I really want to do with this? Okay, I want to get rid of this 199. Did I put, I must have clicked on something. Okay, so we're looking at $7. That means I'm risking $700. Let's take a peek at a risk profile. Okay, so this is showing us, reset the slices here. And my phone is going nuts on me. I don't know what's going on. All right, so if it moves down, if SPY moves down 10%, that's $1,451. But if SPY moves up 10%, then I lose $592, which is almost a total loss. We lose $6 out of $7 we spend on this thing. But is it going to move 10% up? Probably have a harder time moving up 10% than it would moving down 10%. So let's say that we have a correction or we have some sort of big move down. We're looking at 190 here. So 190, if we go down to that last support level, which is down here, 190, we would be looking at $550 profit roughly. if it does that quickly. You know, we got theta working against us. But if it moves up just a tad, let's say it goes back up to 202, and then I decide to bail. Let's say I want to bail at 202. Okay, let's get this down roughly there. I could do it just down here too, just say 202. Duh. And we'd lose $148. Probably, though, IV would be decreasing. But let's say it goes down to that support level at 190 and we get a 5 percentage point pop in IV. Then we'd be looking at, and we just change it down here, we change that down to plus 5%. 5 percentage points, not 5%. So now we're looking at $750 gain versus $550 gain. Okay, so I've been kicking this around in my head if I really want to do this or not. Let's reset the slices here. The worst case scenario would be if we would go down to this resistance here. The resistance at 188, well, that's not really all that much. So if we went to 188, where are we here? 180. We can just say 188. And now we're looking at a $707 gain, and we need to add that 5% in here again. So we're looking at almost a $900 gain. And notice I'm totally bearish in my thoughts here. I mean, why else would I be buying a put anyway? So I'm very bearish over the remainder of this week and maybe in the next week. I don't know what the president's going to say tonight. I don't know how that's going to affect the markets. I don't know if he's going to rally support behind his ideas or what. I have no idea. But that's why I guess you buy insurance. So if the market moves up, IV is probably going to decrease, although there's not a lot of room for it to decrease. So let's just say that it goes -2. Oops. -2 percentage points. And then without doing anything, we're going to lose $100. So the white line gets pushed down when IV decreases. The white line gets pushed up when IV increases. So what do? Well, I am totally and 100% in favor of doing this trade. So I think I'm going to do it. So it'll be on the report tomorrow morning, and we'll see what I paid for it and where we're at after the speech tonight. And tomorrow is 9/11. So let's just all keep our fingers crossed that I actually lose money on this, because that's a good sign, and that means that we got through it all. And that's really what we're looking for. All right, that's it for this short little video on this insurance policy. Thanks for watching. Have a great day and happy trading.